Nice to be back with you after a little bit of an interlude. And boy, a lot's happened in the financial markets, the economy, during the time that we haven't been talking to each other. Let me bring you up to date on what our thinking is. Obviously, the big question that I think every investor faces is that, we've number one seen some pretty tough markets as we've started 2016. And the question is what we're seeing a bear market, the start of a bear market that's going to be accompanied by a global recession or an economic recession in the U.S. That is the key question. The answer, tentatively, which I have, and you always have to be looking at the numbers to make sure that you're on the right track, is that this is not a bear market that's going to be accompanied by a recession, but it's simply a correction and an ongoing bull market, although a very severe correction. I think everybody should keep in mind 2 points. One is that we've had very severe downdrafts in the stock market previously that were not accompanied by or followed by an economic contraction or recession. You remember, of course, 1987, the stock market crash, no recession. You probably remember 1994, no recession. 1997-98, the Southeast Asia financial crisis, which really brought significant problems to countries throughout the world, particularly Russia. Again, no U.S. recession. And of course, the problems we had in 2011, 2012, when we had European sovereign debt crisis, and again, no recession for the U.S. Severe declines in stock prices, but no severe or even any contraction in the U.S. economy. And I think that's probably going to be the outcome this time. So the second thing to keep in mind is that some of the economic and monetary variables that we watch pretty carefully, things like bank lending, money growth, liquidity conditions, leading indicators for the economy that tell us where the economy is going, remain fairly positive and are telling me that there's not going to be an economic recession. You don't know. We've got a lot of advisors that are helping us on this, and they agree that there's not likely to be a recession. So it's going to be something similar to or along the line of what we saw in 1997-98, the Southeast financial crisis, where, yes, a sharp decline in stock prices, but no recession. The question, of course, is what are we doing in portfolios? What should you be doing? Should you be doing something proactive, such as reducing your target for equities? And our answer to that question is, of course, this is a sleep at night issue. If you can't sleep at night, sure, maybe reduce or cut back a little bit on your exposure to equities. But in my judgment, it's probably too soon to, let's say, throw in the towel, that I wouldn't reduce my target for equities and I would maintain a fairly positive attitude and a good exposure to equities. If I'm right, if we're right, and the economy continues to expand through 2016 and 2017, as I expect will be the case, yes, it's the case that earnings are not going to grow very strongly. Yes, it's the case that the Federal Reserve will probably be leaning towards restraint, raising interest rates some. And yes, stock prices are not likely to do much under those conditions. I think it's important to keep in mind, though, they've declined to levels that are very, very attractive. So I think that we'll make some money. The returns from the equity market, stock market, are going to be better than the returns from the fixed income market. So I continue to have a fairly good exposure to equities, and keep your fingers crossed. These are very difficult times, and we periodically go through these very volatile, very difficult times where there's sharp declines, 20% plus in stock prices, and then we get back on track and we recover everything that we've lost and go to new highs. My suspicion is, and maybe it's just that I'm a real optimist, a continuous optimist, my suspicion is that's going to be the outcome this time, that eventually we'll be moving to new highs, and those that keep or maintain an exposure to equities are going to be very, very well rewarded. I understand this is a difficult time. If you have any questions, please give me or any one of us at Hugh Johnson Advisors a call. We look forward to hearing from you. We look forward to talking about what's going on in the world of finance, the world of economics. These are difficult times, but we're all in it together, and I think we'll come out the other side of these difficult times like we have in the past with a pretty positive experience, and we'll all be happy about the outcome. Again, thanks very much, and thanks very much for the confidence you continue to show in us.